Good morning, everyone, and welcome to the European crossover webinar. And we are seeing equities on their lows. We do have jobless claims that are going to be out today here in the U.S., and that's certainly impacting indices that have continued to go on and slide even further. Bear with me. And we'll just take a quick swing there. Bear with me. And you can see here we're pressing on our lows now here in a moment. Obviously looking here at NASDAQ also, which is rolled over. Similar as far as structure. You can see here sliding back also. You can see almost identical, but certainly we're pressing lower here in equities as we wait the jobless claims. There's the numbers had a bit of a disparity as far as what the potential is on this. It's spooking the market a little bit here. We've even seen gold come off of its lows. We did go and get a pretty good move down here in gold. You can see here we've been always as low as 1622. Actually, 1610. I apologize. So it was as low as there. And let's go move into the crude oil. Coming off the lows here, 2371. And let's go on and take a look here on the economic calendar. Obviously, jobless claims is going to be the big number that many are focusing on today. We had UK retail sales, which came out earlier, came in down 0.3. And just recently just had the French business climate. We do have BOE meeting today. Interesting, because it's a very late time compared to what we've seen before. Obviously due to the time change, but and we do have final GDP here in the States. But as I mentioned, the big number here is the jobless claims. And you can see here the road as poor as 1 million. But we've seen numbers even much higher, a lot higher than that. Let's go on and get into the news. We are seeing the dollar yen weaker today, coming off of those highs, which was been a bit of a concern because I was thinking, this thing could really start to move higher. And we're going to go and just touch on that real quick. A falling yen may not be the economic cure Japan seeks. Fallout from the coronavirus outbreak may finally lift the curse of the safe haven yen for Japan from the policymakers' fear. Fiscal laxity could lead to a currency free fall, eventually undermining the efforts to cushion the economy from the efforts to cushion the economy for the pandemic. And that's been my concern. Although right now we're below 111 right now at the moment. The yen, which investors typically snap up as a safe haven in times of financial market stress, fell nearly 10% against the dollar this month as pandemic fears spurred a stampede in the refuge of the world's most powerful currency. For Japanese lawmakers who have repeatedly fought in recent decades to tamp down the currency as its strength hurts the country's export-reliant economy, that could prove problematic against the backdrop of a huge fiscal stimulus. The Japanese government, like many others around the world, is preparing to open the spending spigots, cushioned to the blow for the coronavirus, inflated already bloated public debt with spending of at least $137 billion. Finance ministry officials say the government will be forced to issue more bonds to foot the bill. Already, Japan plans to sell 153.5 trillion yen, which is 1.36 trillion of bonds. And the year began in April to help pay for the rising social welfare costs. Some officials warned the further unraveling of the fiscal discipline in Japan, which has been the heaviest debt burden in the industrial world, could sow the seed of a run on Japanese assets and erode the yen's value in the long run. That's been my concern, that this could really spin out of control. But we are seeing the yen strengthen this morning, but certainly not in the same moves that we've seen previously. Is just coming off of the where we have been. And I'm speaking specifically of the dollar yen. Also, my concern has been, remember we mentioned the yen has been weak against all the currencies going across the board. A strong yen is a problem, but now we're worried about a weakening of the yen. If we do something wrong as far as mapping the finances, it could cause a yen free fall. If we end up issuing huge amounts of debt, market sentiment could change abruptly, and that could be problematic, he said, on the condition of anonymity due to the sensitivity of the matter. Finance ministry officials in charge of currencies declined to comment to say whether or not they're allowed to talk about the markets. To be sure, Japan, the world's biggest creditor, is unlikely to face the kind of sharp capital outflows suffered by some emerging economies. But a cut to Japan's sovereign debt rating would lead to downgrades in the banking sector ratings that could unleash a dangerous pullout of the current overseas investments, some analysts say. Makoto Noji, strategist in FX bonds, foreign bond strategist SMBC, says Japan won't draw much attention as other countries were also deploying huge stimulus. But once the dust settles, the coronavirus is resolved, market players will shift their attention to Japan's huge public debt. The size of the stimulus will be enormous, and that could fuel worries about Japan's fiscal health down the road. Already panicky investors are hoarding dollars, not the usual prize yen, drawing a rare voice of concern from Finance Minister Taro Aso. Everyone is buying dollars. That's ideal to the decline. That's leading to declines in other currencies. Stocks and bonds are both falling, which is something that has not happened before. Also told Parliament, for many years, market participants don't see an imminent risk of a yen free fall and say the Japanese currency now hovering at 110 to the dollar is comfortably above the 120 level, seen as policymakers' line in the sand. Still, Japan's huge debt pile and an economy which is already struggling before the virus outbreak make it vulnerable to any abrupt sell-off in government bonds and would be lifting borrowing costs. Some Japanese policymakers look wary of the example of China, which is struggling to contain capital outflows despite its enormous foreign reserves. China's burned through 1 trillion of reserves to stem a capital flight in 2015. Its foreign reserves, the world's largest, shrank to 8.5 billion in February to 1 trillion as the yuan slid on fears of the pandemic. Japan also intervened to put a floor on the yen in 97-98, spending 4.1 trillion or $36 billion to stem a yen fall triggered by a domestic banking crisis. Its foreign reserves, the world's largest, stood at 1.3 trillion in February. It doesn't make any sense that these markets barely move on top on huge stimulus in a country like Japan, which is saddled with huge public debt, said another finance ministry official. It's hard to tell. It's hard to tell when this quietness will end, and that's my concern. Like I said, if you were trading currencies, like I said, 6 years ago, I think it was 5 years ago, that's when we saw the dollar yen really, in a situation where I think we eventually went to 121, I believe it was. Let's go to a monthly calendar and see that. Wow, look what we were in 96. Look at that, 148. This is what we were back in 2015. You see that? We got up as high as 125. Look at that. And the concern is if we were to get and make this bump up here, a lot of talk at that time was we were going to race up in here to these heights, and boy, that would really spin things out of control. So, where before there was a concern that they could get that the yen would always strengthen. The concern now is that if it were to weaken out of control, you can see right now on the monthly chart, we're almost forming like a hammer at this point after this pullback, which really could open the door, like I said, going further out for this thing to really push. And we talked about that. If we were to get it close above 1187, we would push up to I think I was looking at 113.80, and then from there 116. You get past that 116, boy, you really open the spigots, and we can really start pushing up rather fast. And this thing could spin out of control for valid reason, actually. Let's go on and bear with me. So it's good news to see this pair back. Let's go and move into the euro. Let's wrap up real quick on this. The dollar down before jobless claims and U.S. stimulus passes Senate. So the dollar led against the yen and the euro on Thursday ahead of the U.S. data due to the rate release later in the global day that is can't even talk this morning. It is expected to show a surge in unemployment benefit claims as firms lay off workers due to the rapid spread of the coronavirus. The pound extended declines against the euro and the dollar due to worries that Britain is ill prepared for a spiraling number of coronavirus cases as healthcare systems in Italy and Spain are already being overwhelmed. The Australian New Zealand dollars, both of which are closely linked, linked to the global currency trade, commodity trade, fell against the U.S. counterpart as traders avoided the taking on excessive risk. Investors welcomed the passage of a $2 trillion U.S. stimulus package to offset the economic impact of the coronavirus pandemic. But there are already indications that some of the U.S. states will need more money for medical supplies as the healthcare system struggles to cope. It could be difficult for the markets to digest weekly jobless claims, says Toru Sasaki, head of Japan's markets in J.P. Morgan. Bad numbers are expected and priced in to a certain extent, but these are people who think things will get even worse. In the end, this may support the dollar as investors choose to bring their money home. The pound's losses accelerated early in Asian trade after the British government said the total number of coronavirus cases in the U.S. rose to Wow, 9,529 on Wednesday from 8,070 the previous day. U.S. weekly jobless claims due later on Thursday expected to rise to around 1 million. Some people expect far higher than that, which is also well above the previous peak seen during the global financial crisis. Some analysts say the jobless claim could even exceed 1 million as companies are expected to rapidly shed workers. Draconian restrictions on personal movement aimed at slowing the spread of the coronavirus are widely expected to cause a global recession. Federal Reserve Chairman Jerome Powell scheduled to speak on the U.S. television at 11 GMT, which may provide some information on the policymakers' response to the pandemic. The U.S. Senate approved on Wednesday a $2 trillion emergency package, and U.S. President Trump is expected to swiftly sign the bill following a vote in the House of Representatives on Friday. The euro at 9.11 in Asia on Thursday, the common currency held onto its gains against the Swiss franc. German lower house on Wednesday suspended the country's debt brake and approved a debt-based or debt finance supplementary budget of 156 billion euros. And let's see, with that, we'll wrap it up. Moving on to the euro. The euro finished Wednesday's session at the best levels in 5 days, strongly closing at the resistance level of 882. Resistance will be 918 followed by 956. So already past the 918. So actually we're going to be looking right here at 956. That'll be resistance. And for support, certainly doing much better here in the euro. It's going to be right there at 881. You can see that coming all the way across here. Looking at the cable. Cable is able to secure 2 back-to-back positive closes, a feat the market has been incapable of in nearly 3 weeks. Resistance will be 1986 with support at 1784. So 1986 on the upside. Looking at support, it's coming right there at 1855. So the Aussie dollar broke broke clear of 60 cents even on stops, but was unable to secure a close, setting up a gravestone doji. Support will be 58.45. We've actually, we're still above that, but we're coming close down there with resistance at 59.89. So it's going to be 58.45. We're looking on the downside for support. Resistance is going to be right there at 59.93. Looking at the Kiwi. Kiwi traded in a higher but relatively tight range on Wednesday. The pair was unable to close above the key level of 58.53. You can see that we're actually challenging that right now, which will be resistance followed by 59.02. Support is going to be 57.25. Probably have to raise the support, but we're looking at 58.53 followed by 59.02. And support. Right there, you can see all the touches. 57.68. Let's go move on now to the dollar CAD. So the dollar CAD relented the upside advance on the backdrop of a potential OPEC cooperation with crude oil's slide. We're on the backdrop of the crude oil slide. So although right now we're pressing lower here right now, crude oil, I mean, we're 23.51, but I think it has to do with where equities are. But there appears to be some movement that maybe will kind of get things squared away. Really, it's more or less really between the Saudis and Russia. But potentially, if they can get that squared away, we could jump back up, and that's really press the dollar CAD lower or allow it to come off. But we're probably still going to see this a bit on the weak side until we can get past this jobless claims number. So support is going to be 42 even. Resistance will be 42.77, but it said beyond that 41.47. So let's go with 41.47 and resistance 42.77. 41.47, yeah. Let's go and move into the dollar yen. Actually, dollar peso. So the peso pair back on Wednesday, closing just below 24 cents. Support on Thursday will be 23.64 with resistance at 24.66. And the dollar yen, we didn't have any changes from yesterday, but you can see here how we're sticking them close here, and we've finally pulled back a bit. I think the support we had, remember here, you see down here is a 1040. You can see that right there. That's going to stay the same. So we've actually come down here to that 1040. So no changes on the downside for support, but upside is going to be right there. You see that? 1121. Let's just call it 1122. And the dollar index broke lower, closing sub 101, suggesting a top may be in. Resistance will be 101.50, followed by 101.68, with support at par 72. We've actually dipped down here. It looks like we've made it all the way down to par 47. Well, we've exceeded the 23% here. What we've got down here is all the way down to par 23. We'll go with that for support, par 23. And on the upside right there, which is going to be 101.23. Yeah. That let's going to move into the well, you can see here that the yen strength is finally starting to come in just a bit, not a whole lot. So looking out, resistance now. It's going to be right there. 65.07. Right there is going to be support, which is going to be 63.65. Let's now go move into the Euro yen. You're still holding up pretty well against the yen here. We do have our resistance coming in right there, which is 2096, which is what we had. We had actually 2095. We'll just leave that there. But support, just a hair under there. 2019, so we'll move from 2008 to 2019. Well, you can see right here the resistance. You can see here, but there's really more volume coming in right there. Well, actually, that's where we stopped, okay? Which is 85, 81. So we'll stick with that. You can see the volume. You see, if you look at here, the closing right there, 86.55, but the real volume is coming right across in here, which is exactly where they ran out of gas, 85, 81. So we'll go with that. Support. They've already struggled to come back up here, so likelihood is for them to roll back down here, and there'll be some support, at least for today, coming in 81.97. That's still a pretty good little fall. 81.97. Holy smokes, ham. Right there. $81.99. So let's go move into the 2 hours so you can get a little bit closer look here for support and resistance, although that 81.84, we actually had 82.90, so it's actually made a pretty good little dip down here. Let's see where we stand here. Looking here at the volume, you can see right there. See these lows here, and then this close here. There's your resistance, which is going to be 89.16. Boy, this thing has really moved all over the place. Um, support comes in right there, which is 85.58. And move on to the ASEAN. Coming right there. 86.12. 86.12. That's 66.12. I don't know how they came up with 86. 66.12. I don't think we'll dip that far, but we're going to have the support right there, 64.78. And let's go to the guppy. How the heck did I pull that up? Oh, okay, I put it up. We're kind of middle of the road in it here, and we've got this key level coming across. Resistance is going to be right there, which would be 32.18, and that might even be a bit ambitious, but that would be resistance. Well, you can see right here support, and actually they've already hit that before, and that comes to be support again, which is going to be 29.95. Looking out. And just sharing some stuff on the webinar, so folks in the chat room. Apologies, one moment. Actually going to be sharing the story about the yen in the chat room, so just discussing with Amanda and Konstantinos. Okay, let's go move into the let's go and move into the sterling odd. Wow, this has been all over the place. We remember we talked about this actually from last week when we were saying how we had this range, and it had been, even though we had movements. Let's go to the daily. I'm over here yakking around. Hang on a moment. Remember we covered this last week for the analysis. Remember how we were saying that even though we've been all up and down, remember that the closing ranges have been in a very tight spot. So we're seeing the same thing. We kind of pressed a little bit on the upside, but we're still within this range. Let's go with the resistance being right there, which is 146, which really now we're way down here, but still potential. Let's go move into the short term. You can see here coming across here, you see that touch and here that's touch? That's 0116. And for support, Boy, we're trading pretty tight here. Let's just go with the level here, and that's going to be 99.36. Let's go and take a look at, that wraps it up here on the FX side, but we're going to take a look at this SPOOs. Kind of take a look at things are here. Dollar index still weaker. Yen still strengthening. I mean, not yen, euro. So let's take a little bit of, we haven't done that in the last few days, but today's going to be critical because of the jobless claim. So let's go and take a little bit of a look here. So I like to go backwards, well, not backwards. I like to look out and look back towards closer. So let's go, and what I mean by that is let's go straight to the weekly now. So let's go and see what we stand here. Oh, and I did load up my charts again, and I was able to get that 2 hour. Remember yesterday I said, well, what the heck happened to my 2 hour charts? So 23.97 is important, but we may go in and blow through that. This is getting a little bit concerning here. So watch this 23.97, and then just below that, would be right there. 23.41. There you go. You gotta watch this range here. So 23.97, we're not even that far away from it. Okay, so but the big old range here. So let's now move into the daily. The daily's a mess. Look at this. I mean, that's why I'm even paying that much attention. But 22.64 is, that's a long ways out. So 23.51 here. Those have been key lows. Look at that right there. Key on a closing basis is going to be right there. 23.83. We'll call it 23.84 is going to be key on a closing basis. 23.84. So 23.84 to 23.51. Right there. Need to clean up this daily because it's not like as if we're going back up there anytime soon. And let's go and move into the 2 hour. Finally got my 2 hour back. $23.52. the 2350. So we know right now 2352 to 2384. 2384 is key on a daily. 2352 on this 2-hour chart. Will kind of work like a pivot. If we close below that, then we're going to really start trying to press. Doesn't mean we're going to completely come unglued, but we're probably going to press below 23, which would take us to, and obviously tomorrow's Friday, take us to 2283. So the key numbers we're going to look at is 2383 on the daily on a close, 2352 on the 2-hour. If we close below 2352, it really opens the door for us to go just below 23 on Friday, which would a key test would be 2383. Let's go move into the half hour. We're sitting right here at the 38%. 2367 would be the 50%. Let's mark that. Doggone it. Just have to intercede it there also. Let's go mark this off. And just below here. Looks like about 2348. $23.45. So here's the key numbers. 2382, well actually 2383 on the daily close. Below that, 2352 on the 2-hour chart. Go back to that. 2352 on the 2-hour chart. If we close below 2352 on a 2-hour, that's a close, then that opens the door for us, especially if it's later in the day, or mid-session, well, past 1 p.m. Eastern time, opens the door for us to challenge 2283 on Friday, or, go test just sub 23. And then if you're looking here, numbers to overshoot, 2367 on the 50%. Now remember, when you usually go to a fib, if you don't hold that one, it usually doesn't go to the next one, it skips. But that's if it would have bounced. Like I'll give you an example. So this is a 38%. Let's go and pull this up. So where's the 38%? So if we had come here and we bounced up here, and let's say we made it up to about 2450, and then we roll back down, then potentially this doesn't hold. But we're not bouncing. We're just kind of holding steady at the 38%. So the key one is going to be the 50%. So on this overshoot, if we do get an overshoot, and this is also confluence with 2367. So it'll be important on a half-hour basis for us to defend this 2367. So you could see this overshoot and reclaim 2367, which would be key. And what are you looking at as a backside support? 2345. So basically, you've got your key numbers right there. Okay, we'll hit it again. On the daily, 2383 right here. Let's pull this back. $23.83 to hold on the daily close. Important on the daily close. If not, you can see here the importance of this 23.51. We've already talked about this, because if you go into the 2 hour and you close below 23.52, that opens the door for Friday for us to test 23 even. To actually go as low as is doesn't mean we can't go even lower, but could easily test 22.83. Then if you look on the half hour, on the initial fall, the overshoot, we could press as low as 23.45. Now, that doesn't mean we can't go lower, but I'm saying that'll be key. But one thing that would be important is on the half hour is for us to reclaim 23.67, which is a level, which also confluences here with the 50%. So that kind of gives you a lay of the land. But anyway, that's where we stand here. Thanks for joining us here on the European Crossover webinar, and good luck. See you all in the chat room.